All right, good morning, everyone. As always, we'll get started with a broad market outlook. We'll go over some top ideas, and we'll take it from there. So getting right into it, again, I tried to highlight the big picture, this shift in the broad market out of this breakdown stage that we've been in. And as we continue to move into what seems to be a base that's forming down here. Now, again, it's very easy to say that, or it's easy to believe that when the market is near its recent highs compared to when the market's down here near its 52-week lows, where it's it looks like the world's going to end. So we want to be aware of this, that we are getting near the upper end of the resistance area of the broader range that we're in. This isn't like bet the house up here, but there are still some setups from some of these individual names that we're seeing, like we were mentioning before we just started, like Crocs, and is up 20% plus in the last week or two, breaking out of that major base. Now let's pull it up. Since we're talking about bases, this is a perfect example. Crocs had broken down nearly 70% off its highs. It based out for multiple months. And then again, earnings was more likely the catalyst to break it out of this base. But then you got that quick move from 80 to 100, more than 20% in a week or two. And this is what we're starting to see. We're starting to see the market kind of leaving broadly this breakdown stage. We see it starting to form this base, but it still takes much more time than we typically anticipate before it's going to really start working itself higher. So the broad market is still kind of in this area of the base where it's starting to form, but it just needs more time to really, trade sideways and get some legs before it's going to really push higher and push out of the base, which I think we'll start to see probably at some point next year. For now, it's just we're just starting to form this base. So moving on some of the major sectors, again, energy, as we always, as we've been saying, running into resistance at this major retest. Again, it can often push a day or two higher to kind of get those late buyers to chase, but it loses momentum. And I've kind of drawn these 3 green lines to show these steep uptrends that we've seen in energy lately, and how quickly, once that trend breaks, how quickly they can negate these moves. This was an entire retracement, 50% retracement. Who's to say what this retracement is going to be? But up here is definitely the area, after a 30% run up in a month, this is when we want to start taking some profits before this trend line really gets cracked and it reverses half or more than the entire move and continues to trade in a very wide range. Again, 10-year continues to kind of roll over a little slower than I guess even I would have thought after, I guess this was last Friday's action. We had like almost a 10% down day. We are seeing these lower highs, which are good signs for the equity market, as we continue to see if this 10-year will roll over into 3.5, and we'll see if it holds there or bounces lower. And again, a lot of the other sectors and major markets are kind of the same thing. Mostly everything is running into major resistance, and we're starting to trade more, horizontally in this, what seems to be more of an obvious range. The Dow Jones is, right at resistance at this 34,000. And we're going to see this in a lot of other sectors. Healthcare, same thing. We've had this diagonal downtrend, and now we're starting to see more horizontal resistance. And for now, look through an entry through this 248 in the healthcare sector. But this is more of a tighter entry versus when we were buying up off of support. Now we're seeing this pretty much all over the place. Financial, same thing. Very clear level of resistance that's forming. Very clear base, that's been developing in this sector. But this is the profit taking area, not the let's get crazy and buy up here. And same thing, another example with materials, ran into resistance. Again, we were buying it, 20 points go up through 160 up off of support. They ran up into resistance and started to turn and head lower. This is where we want to be taking profits. And this materials is a great example. And I'm not going to keep going through the rest of sectors, but it's again the same thing we can continue to see here. Very clear levels of resistance, and eventually we'll break through them. But for now, it seems we went too much on a run these last few weeks that we should expect any crazy follow through. So moving on to some individual names, this MGPI, which was Cush's idea from last week, is working out nicely. It's blue sky breakout after multiple attempts, just trailing it versus the prior low a day. Monster is probably my favorite name for the week. This blue sky breakout through 100 has been setting up for almost 2 years now. This is the tightest entry that we've seen in the name so far. Earnings are out of the way. risking about 4%. So this is my bigger focus for the week ahead. DCP, this is not a blue sky breakout as it's trading. The all-time highs are up in the 60s, but this is just a nice flag that's been forming for the past, for most of this year. And we'll be looking to add up through this 39 and then up through 40 if and when the stock is ready to go. A couple other names is Regeneron through this 750 area has been setting up. Again, not the hardest level, but one that's been, developing for some time now. And again, just scan through some of these other names. This DG setting up, but again, we're at resistance. It is up 20 points off its recent low. So we might have to give it a little bit more time to develop, but definitely one to keep on the radar through this 260. So with that, Heaven, if there's any ideas that you want to go over,
yeah, absolutely. We'll go over some member ideas right here. Reynaldo's got a couple. First one is ABBV, which I feel like we went over as well last week. He's looking at the major level at 157, which looks like we did go over this one last week. Seems like it's still kind of setting up. Looks like it tried to go last week and it failed, but then quickly recovered, which is it makes it a little difficult just because it kind of went from 150, went all the way up to 157, down to 151, then down to 150, now back up to 157 within 3 days. If you're giving it the right room to 150, I think it looks pretty good. But I think to really make it A+, it probably needs a little bit of sideways consolidation right under that resistance area.
Yeah. I think this needs to just tighten up a little bit more. And eventually you get that move through this 157, and then it's just that, that kind of race back to the retest. But it just definitely needs a little bit more time to develop. Again, it has a few attempts here. We have 1, 2, it's kind of 3 attempts so far, which is good to see. Maybe that 4th or 5th attempt is when it goes, but just want to see it tighten up a little bit more.
Yeah, and $7 risk isn't too bad on a $150 name. So even if it did go today, I wouldn't be against buying this one today for 157. Other than short week, holiday week, probably lower volume, lower probability of seeing strong breakouts. But I think this is a viable setup even if it goes today. Next one Ray's looking at is Costco through, what was that, 530.
Okay, so we had this line drawn again. Someone might have mentioned this a few weeks ago up through this 500. You do have earnings. Not for 2 weeks.
Like, 2.5 weeks.
I think for now it's probably a pass. I think probably this 560 is probably a little bit more significant. If you were in from 500, I think so. I think you can add, but I think getting in here, you might need to develop, tighten up a little bit more than buying 530 versus 5. Given it 20 points, you're not going to sell this at 630. So this is like the trade. It's like buying it up through here versus here to get to here. I just don't think you're going to get that before earnings in 20 days or 17.
Yeah. Ray actually, he drew out like the descending resistance line from those highs in April down like that. So that's sort of what he's looking at for the breakout, which I see that, but I agree with you that it's just sort of been on a pretty big run already. So it might need to fill out that triangle a little bit more, maybe pull back, and then we can get a better, some more strength. Yeah, just fill that space because it's got a lot of space there.
Yeah.
But definitely want to keep an eye on over the next few weeks to the end of the year. And then the third one he's looking at is Cintas, CTAS. And he's looking, this one flagging just under all-time highs. So it looks like he's trying to buy this through for around like 452, 453-ish.
This averages weight. You have the retest right here. We've talked, the example with energy. Let me get rid of all these 9 million lines. The retest is ultimate resistance. That first major retest, this is, the 52-week high. This is the retest. You don't really get much love at that retest. The next attempt, subsequent attempt, all for it. But that initial attempt, not really worth it. So for him buying CTAS, he's like buying it right here, where it more than likely is going to retest this 460, but your upside, you got 10 points of upside. Maybe it pushes to 470, or maybe it can push to here, but you're barely 1-to-1 up here. So this is where let it, set the alert, let it retest this area. It more than likely will, maybe even this week, but you're not going to, very rarely is this retest breaking out and off to the races. The only time you really seen it that I could think of an example is like Tesla. It's probably the only stock that really was able to really run through a prior retest. What most other names, 9 out of 10 times, it's gonna push a little bit higher to chase people in, and then it just starts to fade, as we're seeing with energy over the last week or two. So this one I would, see through 460 in time, phenomenal. I think right now into the retest, just hold off on it.
Yeah. Speaking of that Tesla, if you're looking at it right now, this thing is gapping down a little bit right past that support area. Do you think this goes lower this week, or you think shorts are going to get trapped and we see some sort of reversal? What's going on this one?
I mean, overall, this is definitely down to this area. This thing's I think it's getting pretty smoked. Yeah. This just percentage wise, again, people forget that this is again a car company. We think about Peloton and all these other names that had, when they were up at their highest levels, it was the smartest investments in the world, and then they become dead, and it's hard, it's like one major event can kind of kill it. And I'm not saying Peloton, Tesla are the same. I'm just saying the chart where Tesla's kind of, and again, I'm not trying to say Tesla's going to gap down 50% overnight, but when these stocks do start to lose the love that the market has for them, they can die much quicker than we expect. And Tesla is probably one of the biggest percentage increasing stocks of all time, given the run up it has. That there's a lot of downside for it to have, and down through this major support. This is, you have 1, 2, 3, 4, 5, pretty significant attempts at this level. More than likely, it's going to see lower prices. And if you're shorting 180, versus 200, and you're risking 20 points, you probably could capture 100 points in this. So I definitely think we see some lower prices.
Yeah, I think it would be tough to chase here though, because it is down so much. I mean, even if you give it that 20 points, really, it's like, this thing is down almost 50% since September.
Yeah.
So you kind of miss the swing. If you're looking to swing this to the downside, I think you missed it. And I think a lot of people are going to get trapped, because that's what Tesla loves to do. Is it loves to look like it's about to just die, and all of a sudden it just rips $20 in people's faces. So we'll see what happens this week, but just an interesting chart for sure. Another one that I saw a lot of members were discussing was this Celsius, CLH. We had a lot of members buying this one last week. It had earnings, and then it had an inside day after earnings, and a lot of people were buying this 94, 95 area. And I saw some people, I don't want to say freak out on Friday's sell-off, giving back most of the gains over those 3 days, which is we've seen this time and time again this year, So I was wondering, what would be some advice for someone who took this trade? Like, what would have been, the ideal? Is there profit taking? Is there a certain stop that you would have if you're still in? Would you have your stop in a certain spot? What would you do here?
I think it's really just under that low day, under that 94. Because again, it's like now it's easy. Oh yeah, I should have sold the right off the open at 100, but it's like, that doesn't, do any good, because if it opened that day and traded higher, then you just gave away a good stock. So I think really for me, more so, it's always just trying to make sure I lose as little as humanly possible. So even if I bought 94 and it went to 100 and I got stopped out and I made nothing, I didn't lose anything. I think that's the most important part with a lot of these trades, is just trying to lose as little as humanly possible, and knowing that you're not going to get every breakout perfect. So the trade started to work. Again, how it closed on Friday, I probably would have just been taking this off into the weekend. I don't think I'd be trying to this is like when you hope, okay, I hope today it's going to open inside day and up and trade higher. Like that's what you want it to happen. Even with the name I'm in now, the MGPI, again, Friday didn't close the best, And if it was to trade lower today, it's more likely to reverse this entire move. So really, if I was being very defensive, I would have just a stop under this 118, because if it does take this out, it's going to come back to 116 or to 114 where my stop is. So I'd rather make some money. So for the Celsius, I think for now you have to really just give that stop first 94 and see how this thing opens, and then kind of take it from there. But I think the big thing on my end is really just protecting the downside and keeping it as tiny as possible in every trade, and not trying to think that this one's different or the next trade is different. Just kind of keeping the losses small.
Yeah, and kicking in the strength a little bit too. I mean, coming back into that earnings day high at 100, to me, that's a spot to take a little bit of profit. At least that way, when you do have a break-even stop on the rest of it, so you were buying 94 and you do get stopped out on Friday, you did make a little bit of profit versus, not making anything, or, freaking out because you're losing all of your open P&L and then selling early when, this could bounce today. Who knows? I mean, I know that you don't have your moving averages up, but if you look at the moving averages, it's right at the 8 or 9 day moving average. It touched that on Friday and it bounced. So this just sort of, that Friday kind of gives you a good spot to place your stop. So if you had like that original stop under earnings day lows, which was like 85, now you're moving it up, about $9, which is solid. So if you're still in, I agree, stop under 80 or 90, whatever that is, 94, and see what happens.
Yeah, definitely agree.
Other than that, I mean, I have a couple names that I'm looking at. I know you're looking at Microsoft as well. I'm also looking at this one through that, 250 area in time. I like this little flag that it's forming here, as long as it kind of holds up and continues to make these little higher lows into that 250. Looks pretty solid.
And this is even one, like, I tried this one like way too early. I think it was up to this 260. And I took like a loss in it. I was like, then you move on, and now we're starting to see, this pattern forming. These were the lower lows. Now we'll probably see some higher lows, and eventually this base to 250, definitely looks pretty good in some time, because it's a very, defined resistance level. And then just waiting for that proper entry, and there's a ton of time, 2 months before the next time it's going to report. So there's plenty of time for this trade to develop. And
yeah. Another one that we've got eyes on is ADM.
ADM?
AD as in
ADM.
Yeah. Nope.
ADM.
Yeah. The one that Kusha stole from me, that idea. Everybody's saying, oh, wow, Kusha, nice one. I'm like, what happened to me? I posted it before you. But no, I mean, this one is beautiful. Kusha had a great breakdown on it. This little low cheat entry through 96 for that eventual break through 98 looks really, really solid. Third attempt, higher lows since those lows back in July, looks really, really good.
And this again,
like
another example of one of Ronaldo's ideas. I forget which one, but it was very
CAS.
Yeah, okay, yes, the CTAS.
Yeah.
The CTS very close to that retest, and this ABM showing us this exact example again. Ran right into the retest, starts to pull back in. Now it's setting back up. Okay, yeah, he wants to buy 96, wants to add through 99 or 98. I'm with that, but that's why we want to avoid this trade from here to here, because yeah, it's probably going to go there, but it's not worth that, a little 1 or 2 steps the stock has left before it runs into resistance.
Yeah, and then just having to sit in the chop, is the highest probability is you're going to have to sit in some chop, probably get shaken out, and then it goes without you, and that's a lot worse than being patient, waiting for the clear setup. Another one I got on my list is Home Depot. Solid post earnings flag. So it looks like it actually gapped up before earnings. I don't know if TradingView might just have the wrong day, and it actually that strong green gap up candle is earnings, but flagging since then, been putting in higher lows all of last week. And I mean, this one looks really good through this 317 area. It is on the lower end of the chart, but yeah, it's a perfect example of, back in that stage 1 basing after that stage 4 breakdown, for the eventual move back up to highs.
Yeah, I like it a lot. I think this is again why we're seeing a lot of the Dow 30 names, a lot of the bigger leaders doing exactly as it had its whatever this exact percentage number is, 20, 30% pullback off of all-time highs. And now it's starting to, form these bases. And we're seeing a lot of this with a lot of these names, that it's hard to, like, when most people think, okay, the market's going to keep rolling over. But when you see these bases, that's not people being afraid. It's people, bidding up these companies until they're ready to break out. And I think that's why we start to see more of that going into the new year, and those breakouts, then the market starts to drift with it. And it's just kind of under the hood, a lot of these, seeing a lot of these bases. So this, through the levels you're looking at, through that 320, leading, large cap company, very defined base, very defined levels. Most people have made a ton of money in Home Depot, so you don't really have that many people that are trapped in the name, since it is, other than, a few months of trading above those areas it's at now, most people are pretty happy with this name. So you definitely can have that easy move back to that retest, and then a very big, 100+ point range for that breakout that would probably send it to 500 or 600 in, 2 years from now.
Mm-hmm. Yeah. Another one I'm looking at is Walmart, WMT. Another one that just gapped up on earnings and holding that earnings day low, just sort of flagging. I don't know if I'd buy this today, just because, I could go, but it would be more of a momentum play, and plus that next level that you have drawn out right there. So I don't know if the risk reward is really there just yet. I almost want to wait for that 152 and sort of let it flag out a little bit more, have like a real solid flag of a couple weeks. And that's it looks pretty solid though for a move back to highs soon.
Yeah, I like that 152 level much more. Again, it's Walmart, so it is going to be a little bit lower of a lower beta name. It's not going to have, and you can even just see from like these candles, they don't really get, unless the things getting smoked on like earnings, but you're not really seeing these big 4 or 5% days. It's usually these, kind of, 1-2% days. So I wouldn't really be, I like the 152 level. I think this is a much more significant area. 1, 2, 3, 4, 5, 6, maybe 7 or 8 major attempt. This 160, of course, is going to be an area that it will retest, but not as significant because it's just kind of new all-time highs. So that 152, I think, is the one to really keep the eye on.
We got some in the chat right now. Mike is looking at CVI through 41.25.
CVI?
CVI, yeah.
Oh. Through 41, 42.
41.25, yeah. Just through that recent pivot high, basically.
Let me see that call icon. Yeah, definitely see the only tricky part, again, you're giving this a couple bucks here. So you might want to see this tighten up. And the only reason why that this has been setting up since, what is this, 2013. So it really hasn't seen above $44 a share in nearly a decade. So as much as the longer this thing set up, the better it is. But you also remember it's been doing this for a decade. So you probably want to wait for this to get a little bit tighter. And I wouldn't be trying to cheat this. Like if 43 is kind of the spot it hasn't really gotten above, I guess it's kind of a little loose here. So 40, 41.5. And if you could risk $1 or $2 in this, I think it's worth it. I think you have to give it, $4 or $5. It's probably a pass, just because you're not going to get, it's not like this thing's just going to become a $6 stock just because you got into it. So at the end of this, you need to, if you can find $1 or $2 max of risk, okay. But if it's anything more than that, I don't think you're going to get the upside out of it, given what it's done for the last 10+ years.
Yeah, I agree with that. Ray's got one more. He's looking at UTHR. Looking at high and tight earnings flag. Is this retesting any sort of level, or is this just all-time highs?
I think that's all-time. So this, like, I would much rather this name than the prior one. I would much rather risk 20 points buying 270 versus 250 here at all-time highs, where this thing probably goes to 300+. very quickly, where that prior name is probably going to be a sub $50 stock for the next year or two, and it might not be worth trying to catch a breakout where it's might not have a ton of upside in it just because of what the name's done for the, for so many years. But this looks really good.
Yeah, I agree. I think if it could even go sideways for like a couple more weeks or like a week or two, I think it'd really be A+.
Yeah.
Just really hold up. Because I mean, if you look at the pattern, it sort of just consolidates for quite a while before having a strong breakout.
Mm-hmm.
So like right now, it almost looks like what it looked like. What is that?
Right
in like, yeah, exactly. So it looks just like that right now. Where you don't really want to buy that all-time high, because that was all-time highs as well, right? Had a strong late earnings reaction, but a strong move, and then kind of flagged out, but then pulled back a little bit, pushed up a little bit over all-time highs, and then sort of went sideways for, what was that, 1, 2, 3, 4, 5 months. So whenever I see something like that, I sort of just expect the same thing to happen or something similar. Now, could you try and see if you get that momentum move? Definitely. But again, it's just all about expectations, right? So I think it would be really, really A+ if it could go sideways again for a couple months and then have another strong, 40 point breakout.
Definitely agree.
And that's, I think that's everything on my end over here.
All right, guys. Well, again, shorter week, holiday week, going to be lighter volume. Again, Shake's on vacation this week, so you got me and Heaven in the chat. Any questions you guys have, let us know. But definitely take it light and easy this week. This is not a time to go crazy from where the market is in the short term, coupled with the fact that it is a holiday week where most people are not going to be in front of the screens. They're going to be sitting downstairs on the couch watching, football or
watching World Cup.
Or World Cup. So
let's go.
Just take that information with you for this week. And again, any questions, let us know. And we'll see you in the chat.
Yep. All right. Later, gang.
All right, guys.